I think we had two strong months of data, May and June, where things were rebounding fairly well. July is starting to taper off. Again, I think we're going to see that in the jobs report at the end of this week, where we're, for example, only looking for a 500,000 increase in payrolls and the unemployment rate remaining above 11%. So the activity has tapered off. I think the renewed lockdowns in many states in the U.S. has obviously also dampened activity. Going forward, it's going to be tough to see strong gains in growth. We had that dismal, as you say, dismal Q2 GDP outcome. We're probably only going to see a recovery of maybe 15, 16% in the third quarter GDP, so nowhere near a full reversal of the loss in Q2. So we would argue that any recovery in the U.S. is going to be more slower, it's going to be certainly less significant, and will need more stimulus. And this is why this week is obviously crucial, because of the fiscal stimulus discussions, things like the extended unemployment benefits, etc. And those discussions between Republicans and Democrats in the White House are going to be crucial to see whether and how quickly the economy can recover.
That's exactly right, and it will be really interesting to see what comes out of these stimulus talks this week, because the White House and congressional Democrats still clearly trying to stitch together a deal here. How market consequential is that going to be, in your opinion?
Well, I think the markets are interesting in the sense that, if you look at equities, obviously there's been this back and forth between value stocks and rotation. The dollar, as we know, has come under huge pressure because of a number of concerns about U.S. growth, about election risks, about low and negative real yields. I don't see that changing quickly. I think there is a sense that with the slower growth in place, equities are certainly not reflecting what's happening with the real economy. That divergence has widened dramatically, and we're not seeing any sign that that's going to narrow, even if the stimulus measures are passed. I think no one's expecting a rapid U.S. economic recovery, but yet if you look at the equity market, certainly tech stocks, they're doing exceptionally well. So, I think we're going to still see that divergence between the economy and equity markets continue. In the meantime, that search for yield, when you look at, for example, high yield or junk bonds in the U.S., the flow has been significant. And so I think there's still a big search for yield taking place.